Bitcoin's price went from its first known valuation of $0.000764 in October 2009 to an all-time high of $126,223 in October 2025. In other words, its price literally increased 165 million times.
Despite the fact that Bitcoin continues to rise in price over the long term, it has already been declared dead so many times, it could open its own cemetery.
Some people call Bitcoin thin air, a pyramid scheme, or a casino. Bitcoin has no owner, no legal entity, no production, nothing at all. So how does it keep rising in price? What drives its growth? How is it actually different from a scam?
A regular scam works in a fairly simple way. There is a person or company that deliberately misleads you. They promise returns or a product that doesn't exist, hide important information, take your money, and disappear. The crypto industry is full of this. It happens especially often with meme coins. Meme coins can be created in a matter of minutes. Influencers promote tokens that they bought in advance. Project founders promise a new financial system, and then suddenly discover an irresistible desire to move to an island with no extradition treaty. When the creators and early holders begin dumping the meme coin on exchanges, its price collapses, while everyone who supported the demand is left with nothing.
Scams also happen with crypto exchanges. Just remember the story of FTX. Everyone predicted major growth for the company, and its founder was called the next Warren Buffett. Then it turned out that more than $8 billion had been stolen from customers. The exchange collapsed, people lost access to their money, and its founder, Sam Bankman-Fried, was sentenced to 25 years in prison. But Bitcoin continues to survive, regardless of all the scams happening in the crypto industry. Bitcoin does not have a single owner who can press one button, transfer every existing coin to an exchange, and sell them. The coins are distributed among a huge number of holders, although major holders can still seriously crash the price.
However, most accusations are based on the argument that Bitcoin is not backed by anything. If you look at it that way, the dollar has technically not been backed by anything either. But everything is much more complicated than it may seem. The dollar itself is just a piece of paper, but with one important detail. Behind that piece of paper stands the world's largest economy, the US government and the American tax system. Gold, although it is used in electronics and jewelry, has always been perceived by people as a rare and reliable asset since ancient times.
Bitcoin has exactly the same nature. It is backed by trust, but that trust has to be based on something, right? Yes, and Bitcoin has plenty of reasons for it. First of all, it is the first decentralized cryptocurrency. It is not tied to banks, and it has no single center that can unilaterally change the rules. It can be sent to anyone in the world. Bitcoin can't simply be counterfeited and added to the network. Its supply is limited to 21 million coins, and 20 million of them have already been issued. The rules and every transaction are recorded on an open blockchain. Moreover, no one can simply reverse a transaction after it has received enough confirmations. In theory, someone could try to rewrite the history of the most recent blocks by attacking the network, but in practice, this is impossible. Trust is fueled not only by Bitcoin's infrastructure and capabilities, but also by its ever-growing approval from people, companies, and governments. In January 2024, the United States approved the listing of 11 exchange-traded products connected to spot Bitcoin. After that, it became easier for investors to gain exposure to its price through a regular brokerage account, without having to understand wallets, private keys, or where the password written on a piece of paper 5 years ago disappeared. In El Salvador, Bitcoin was fully legalized. The country's central bank purchases it, which also affects the price. Clear legal regulation creates the conditions for major players from the traditional financial world to enter the market. For example, after changes in US legislation, BlackRock, the largest financial company in the world, purchased only about 739,934 Bitcoins between 2024 and today. This strengthens the price of Bitcoin significantly.
trust and demand are what really matter. In addition to the fact that Bitcoin has demand, it also has built-in mechanisms that reduce issuance and drive up the price.
A halving is a reduction in Bitcoin issuance that happens every 210,000 blocks generated on the blockchain. In the Bitcoin network, new coins are received by miners who confirm transactions and add new blocks. Originally, the reward was 50 Bitcoins per block. The reward is reduced, and this is called a halving. After the 2024 halving, the reward fell from 6.25 to 3.125 Bitcoins per block. On average, a new block appears approximately once every 10 minutes. This means that around 450 new Bitcoins are now created every day, instead of the previous 900. Over a year, that is approximately 164,000 new coins, instead of the previous 328,000. The next halving is expected to happen around 2028.
Although the halving may create the impression that its existence alone creates scarcity, it doesn't actually reduce the number of Bitcoins. It only reduces the reward miners receive for each block. But it is true that fewer Bitcoins enter circulation, and when demand remains active, this drives up the price. Demand itself is supported by Bitcoin's characteristics. Bitcoin is an asset that is usually purchased as a bet against inflation and the endless expansion of the money supply. Others buy it as a store of value, or under pressure from FOMO, the fear of missing out. But Bitcoin has one problem. Unlike stocks, it is extremely volatile. In 2018 and 2022, its price fell approximately 75–80% from its peak. People who bought derivatives with high leverage could lose everything in a minute. Bitcoin has no anchor, although it does have trust. Nevertheless, in a relatively short period of time, Bitcoin has managed to accumulate something that no other digital asset has: recognition, liquidity, infrastructure, and an enormous network of holders. Today, its market capitalization is $1.3 trillion, almost 4 times the market capitalization of Coca-Cola. The halving can strengthen the growth process because it reduces the flow of new coins. Rising inflation, banking crises, and distrust in governments can also increase demand for Bitcoin. Clearer legal regulation contributes as well. Therefore, as long as Bitcoin remains unkillable, its price will continue to rise. Of course, at its own volatile pace.